30 minutes, etc., you will use anywhere between 5 and 25 period moving averages. Yeah. If you're a medium-term trader like myself, you will be using anywhere between 26 and 50, right? And if you're a long-term trader, meaning that you are using the weekly and the monthly charts, you might be using anywhere from a 50 period moving average up into a 200 period moving average. Right. But like I said, these are just guidelines. The next thing is that we get different types of moving averages. Right? You get a simple period moving average, you get exponential, triangular, variable, weighted. And to be honest, there's not much difference between these moving averages. Okay? Seriously, it's not going to make or break the bank here. But the only difference is the way they weight the data. They assign the weighting to the data within the calculation. So with a simple moving average, all your prices are equally weighted, okay, in the calculation, meaning if I'm looking at a 10-period moving average, period 1, period 5, 2, 7, 10, they all count the same, right? Exponential and weighted, they apply more weight to recent price action, meaning that it's more sensitive to what the price has been doing in the last couple of periods. That's one of my favorites. Then we got triangular averages. They apply more weight to the middle of the period, and also your variable moving averages. They apply more weight based on the volatility of prices. So, if I go to the MT5 here, and I will show you, was it gold? Right. So, I mean, this looks like a pretty good moving average, right? You can see how it's catching all these bottoms here, over here, over here. And how did I pick this moving average? Well, basically the market went into consolidation here, and then it started going up, okay? Now, when we look at the market here, I started having higher tops and higher bottoms again, right? Now, it would have been very hard for me to find a moving average that fits, that catches this bottom here. So I tried to find a moving average that would find, what just happened now? Oh, okay, there we go. That would actually catch this bottom over here, right? Now, first of all, moving averages, they are horrible when the market goes sideways, okay? You will get all these whipsaw signals. Buy, sell, buy, sell, buy, sell. How do you think I lost all my hair? Yes? It is so frustrating because most trend indicators, they are horrible when the market goes sideways. And one way to try to avoid this is if you see your moving averages start going flat, it's a sign that more than likely you are in a consolidation period. Stay away from it. Yes? There are other indicators that can also help you, like your ADX. That's something that might help you avoid some of these rangy markets. But in general, when your moving averages start going flat, don't act on it. Okay? You're going to get a lot of false signals. So this is the bottom that I'm trying to find a moving average that's going to kind of act as support. Yes? So, you know, this ended up being, so a lot of people on the 4 hour, they might say, okay, well, I love using a 30, exponential or simple. Listen, there's not a big difference here. If I use the 30 exponential, right, I mean, it's okay, but it didn't act as well as the other one. It's a little bit too sensitive, right? So I would have been playing around in order to find, so obviously I need to go less sensitive, so I need to increase the periods here. So I would have then probably went to 40, right? Okay, this thing is acting up. There we go, that worked. Sorry. So 40 was also not bad, but still not perfect, right? I mean, nothing in trading is perfect, but I'm I'm trying to find something. So with trial and error, you would have ended up using a 55 exponential, which maybe it should have been a 53 or 54 if you really want to be, go NASA on it. But this is pretty good, right? And you can see how this 55 period moving average, every time the price comes down, touches it, goes back up, it's giving me once again a wonderful place to buy back into the uptrend, as long as my tops and bottoms remain intact. Yes? So this is something that can help you. Just to show you that the difference between a 55 exponential and a 55 simple moving average, right? There's not much difference here. The simple will be blue, right? Look at it. It's not going to make or break the bank, yes? But sometimes it's all about preference, and like I said, your exponential is a little bit more sensitive. So when the market gets volatile, it will change a little bit faster. Okay. So obviously here, as long as the price remains above the moving average, the trend is good, the trend is up. I will use this moving average to keep on buying into the subtrend.